Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look now at some stocks on the move today in Europe. I'm Stephen Carroll and I'm joined by Bloomberg's breaking news editor, Louise Moon. Louise, good morning. Let's start with HSBC then, Europe's largest bank, appointing Brendan Nelson as its next chair to replace Mark Tucker.
Indeed, yeah. So Brendan Nelson, he's been in the interim position since October. That's after, as you say, Mark Tucker left. He had been chair for much of the last decade. He was very hands-on and he left over the summer or the end of summer to be the chair of AIA, the insurer. So they've chosen Brendan Nelson to replace him. As I say, he's been in the interim position. He joined the board in 2023. But aside from that, he spent most of his career at KPMG. So in terms of the UK, he's well known in UK boardrooms, but he's being seen as quite a surprise choice and a bit of a safe pair of hands in a way. The surprise being that firstly, he's kind of indicated that he wouldn't expect to serve a long term, and that was echoed by the CEO yesterday that, you know, that Nelson doesn't want to do the full 6 to 9 years, so potentially a short tenure for him. And then also in terms of it being a surprise, HSBC have had a long process of trying to find a chairman. There's been lots of kind of high profile external candidates that have been named in various reports, you know, people including the likes of George Osborne, the former UK Chancellor. So the choice of Brendan Nelson kind of suggests that they couldn't find a good external candidate. He also doesn't have, at least publicly, much experience or any experience in Asia, and obviously it comes as HSBC is overhauling itself and kind of grappling with the tensions that are ongoing between the US and China. That will be quite a key thing to his role, to navigate all that volatility. So a bit of a surprise pick there, and yeah, it's been seen as a bit of a safe pick just to stick with the interim.
Interesting to see the shares in HSBC down around 1% this morning. Let's turn to Sainsbury's next. The Qatari Sovereign Wealth Fund selling a large stake in the supermarket chain. Indeed.
So the Qatari Sovereign Wealth Fund, they've been Sainsbury's largest shareholder for a long time. They first invested in 2007. That was one of their first investments in the UK. But they've sold down now just under 84 million shares. So that's worth £266 million. So it brings their almost 2-decade run as the biggest shareholder to an end. So now Sainsbury's biggest shareholder will be the investment fund that's run by the Czech billionaire Daniel Kretinsky. So he will now be Sainsbury's largest shareholder. Interesting. So since Qatar have invested, Sainsbury's shares have fallen about 45%. They've kind of struggled to reshape their business as the competition heats up in the grocery space. They have been doing a bit better recently. Shares so far this year risen about 19%. They're tapping into kind of cash-strapped consumers wanting promotions, wanting loyalty cards. So Bloomberg Intelligence, they're saying this morning that sales growth has kind of allowed that shareholder exit, and they would expect the wealth fund to sell down more of their stake, to sell down the remaining stake. So an interesting one. Sainsbury's falling on the news this morning.
Yeah, down 3.9% at the moment. And the latest move in a different direction from Inditex, the owner of Zara, up 8% in Spain.
Indeed, a better day for Zara. So, or Inditex, Zara's owner. Yeah, shares soaring the most in 5 years. That's after their sales figures for November. So sales accelerated, revenue up about or almost 11%. It's being seen as kind of a bit of a relief. They've had a spell of slightly lackluster sales, so it's kind of easing investor concerns of it losing steam. Their expansion has cooled quite a lot from their post-pandemic highs. They've been dealing with a whole host of things, including trade frictions, softer consumer demand, but the figures this morning are pointing to a bit of resilience, despite, you know, there's still relatively weak consumer sentiment, but showing some resilience. It's coming out above their peers on the back of a vast number of reasons, you know, including they've got a relatively agile supply chain. Their designs are seen as being very on trend, that kind of thing. So analysts are pointing to their strong margins, their strong cash flow, and they're expecting upward revisions on the back of this. So as you say, shares accelerating on the back of that news.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.